Hey, Mike Swanson here. I'm actually in the Bahamas with Dave Skarica. I'm sure you've seen me down here before. You've been watching his videos for the past year or so. But I actually sold a stock Friday, and I'm fully invested pretty much. But I want to buy some more stocks. But I'm kind of waiting for the market to pull back or consolidate. So at the moment, I don't really have a whole lot to do the next couple of days. So this is a perfect time for me to come down and visit with Dave, and we're actually going to start planning out an investment conference in the last week of January. We did one last year in March for the members. We're starting to plan another one up. But right now, we're thinking about the stock market, what's going on there. We'll give you more details about the conference later on. But right now, I've got a lot of positions in gold stocks that I bought in the end of August, and gold shot up to like $1,050 an ounce. And you know a lot more about gold stocks than I do in the gold market. You follow it a lot closely. You know so many people in the industry. So I was curious, for everyone, not just for everyone, but for me too, what's your take on gold right now? Because I'm pretty positioned in it.
Well, I think the breakout's for real. And, obviously I speak at these resource shows, and sometimes I have to roll my eyes. I'm around so many gold bugs who are always bullish on gold all the time. And because I follow kind of macro trends, I have been bullish on gold for basically 8 years. So I always hate to sound like I'm singing the same tune myself. But in the long term, I'm still bullish. And in the short term, maybe, might be a small pullback, but the intermediate term also quite bullish as well. The reason being is this: gold peaked in March of 2008 at about $1,030, and then it basically spent most of the last year and a half between 700 and 1,000 consolidating, going back and forth and building a base. And it's very similar to what happened in gold in 2006 to 2007. It peaked in early 2006, and then it spent at 730, spent most of 2006 and 2007 consolidating. And what happens near the end of this consolidation or sideways movement is gold basically, the range gets very tight, and then it breaks out of this tight range in the fourth quarter of the year and begins moving up. The gold is usually very strong seasonally in the fourth quarter going into the following year. There's a lot of reasons for this. It's the Indian gold buying season and other factors as well. So it looks like to me that much like 2007 when gold was breaking above 700, that we're breaking out here above 1,000, and we're going to go much higher. Now, when it broke above 700, let's do simple percentage terms. It went to 1,000 in the following 6 months, so that was a gain of roughly 40% above its last high. And then basically, gold, if you do that again, we could go to a 14 to 1,500 by the spring of next year. So this is why I'm really bullish. When you break a big consolidation, it's 18 months, and that's again what happened in 2007, you usually go much, much higher. So right now, actually, the commentary I find on gold is quite negative. Like, people are looking for pullbacks. Jim Rogers recently said he wouldn't buy it up here, and blah, 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 and we're seeing quite negative commentary despite the fact that it's breaking out. And I really like that from a psychological point of view, because that tells me there's not a lot of bullishness in the market. And when there's not a lot of bullishness, they say bull markets climb a wall of worry.
No, I agree with you 100%. I mean, that's the thing that's really kind of surprised me is, you've been in gold longer than I have this year, but I started buying in the end of August, and, the stocks I bought, they did really well. I was real happy, to be making that kind of money real quick. But what surprised me, though, is that I've got all these subscribers and members on my website, and a lot of them are long-term gold bugs, but they didn't seem very excited about what's going on. It's like everyone's asleep, and not just, I don't mean just the people on my website, but just in general. Like you're saying, everyone on CNBC is like, oh, it's gone up too much, don't buy, or whatever.
I think part of the reason is the gold bug community tends to quite heavily invest in the junior stocks, and they crashed last year. And even though they bounced from their bottoms, the average junior is still 60 to 70% below its all-time high. So people don't exactly feel rich with gold even over 1,000, but this is kind of where my newsletter comes in. I think there's this huge opportunity in those stocks because the credit crunch is over, you can raise money now, you have access to capital, and that's what juniors need. That's actually more important, or just as important as a high gold price for them, right? And now, because we've had the tech bubble, we've had you know, the housing bubble, there's not much sectors for capital to flow. So I think this junior market is going to attract a lot of capital, and if it just attracts 0.1% of what the tech and housing bubbles had, it's such a small sector, these will take off. So what I'm doing right now is I've been planning for this breakout. So since the summer, I've been talking to junior companies. I was just speaking at a show in Toronto where I met a few more, and I've come up with a list of about between 8 and 10 junior stocks. And over the next, say, 6 to 9 weeks, I am going to recommend 1 or 2 junior stocks a week because I want people to slowly edge it. I don't want them to jump in. Now, this is just your speculative money. This is small amounts that you're willing to gamble with. But there's great opportunities because, again, a lot of these stocks are 70, 80% off their highs. They're now able to raise money, and a lot of them are near production stocks or stocks that have a lot of ounces and reserves in the ground. And they're the type of stocks that could really go up hundreds of a percent, even just in like a 20 to 30% move in gold here. So I think that is where the opportunity is going to lie. And I wrote in my newsletter that I thought this year would be the year that gold prices and the seniors kind of rebounded and we stabilized. And then next year would be the year that we see the trickle-down effect and we see the mid-tier and the smaller cap stocks do better. And I guess the advantage you have with my newsletter is I've been in the junior market for about 8 to 9 years now, and I know good people in the industry, and I have access to, you know, like deals, knowing which ones are bad and which ones are good, and I can filter them out. And this is kind of, I think, when my newsletter is at its best, when we're in this. My newsletter did very well in 2003, for example, when the juniors were just coming out of their, you know, their lows at that point and started a new rally.
Well, I made a comment a few minutes ago about the people on my website saying there's like some older time people that have been members, you know, for 10 years even, that are real experienced in gold because they've seen, you know, gold go up in the past and they've been a part of that and so forth. And but in the past year, there's been a lot of new people that have gotten on the website, on the free email list, and also became paying subscribers. And those people, I don't think most of them probably don't even really know a whole lot about gold and gold stocks and, you know, what they can do. So they may, I was just thinking when you're talking, they may not even know what the difference is between a senior and a junior because all the stocks I've recommended are seniors. So could you explain a little bit what's the difference? A
senior stock would be a stock like Newmont or Nico Eagle. These are stocks that usually have millions of ounces in production. They're cash flow positive, so they actually have revenues from their gold sales. They have producing mines. And a junior is just the opposite. It's a stock that is looking for gold. So these are usually stocks that don't have revenues, and that's why I say they need the financing markets. They need to finance and raise money to fund the exploration. But see, where the juniors have opportunity is because, let's say Newmont finds 1 million ounces of gold, right? Say for argument's sake, Newmont has 20 million ounces of gold in the ground, okay? That increases its reserves by 5%. So the stock might rally 5%. But if a junior finds 1 million ounces of gold, and say it has 1 million ounces of gold in the ground, it can double on that kind of news. So there's more leverage when they have a good find. But then it's also more gambling because only 1 in every 1,000 gold deposits becomes economic. Mm-hmm. So basically, that's why you have to own a basket of these stocks, and that's again where my newsletter helps because I'm hopefully helping people filter out the good from the bad and the whatnot. And you've seen that, like a lot of the people I know in the industry when I go to these conferences. I almost think the most important thing with the junior is not even the property; it's the people that put the property into production. Because if you don't have the right geologists, look at the Red Lake mine that Goldcorp has. It took 60, 70 years before they hit the mother lode on that mine. And that was because you finally had the right geologist, find the right areas,
One thing about this recent move in gold, it really encourages me about the rest of the stock market because, I've been bullish on the market really, not since March, but since the summer, since June, July. And that's when I started buying. I didn't buy in the bottom, but for me, it didn't matter. I got in stocks that went up for the most part. Overall, my count's up by 20% since that time. But even then, you still get a little nervous sometimes because all the talk is so negative.
It's bearish.
You read all this stuff. The market's going to crash. Or the economy the market's gone up so much that it's not justified by the economics. The economy's not doing great, and so forth, and all that's true. And then there's an argument that we're going to have deflation, and we're going to have a depression, and everything's going to get worse. But to me, the gold move here dispels all that.
I agree.
It makes it so the deflation argument, I don't see how, gold's saying it's not true, and to me that's positive for the stock market
I think by gold breaking out, it's telling you it's worried about paper currencies and inflation coming, and I think the clincher would be that, oil's just, again, because even with the bad economy, oil's hovering around $70.
Right.
So if oil breaks out above its resistance at 75 and starts moving towards 80, 85, that will be the second clincher that we're in an inflationary environment. And people seem to think that inflation means like a strong economy, right? And deflation is a weak economy. But that's not true. Like the highest inflation rate in the world right now, because Zimbabwe basically discontinued their currency, is Venezuela. And Venezuela is in a really bad recession since the blow up in oil prices last year and whatever their socialist regime, and they have the highest inflation in the world. And Zimbabwe, if high inflation meant a strong economy, that'd be the richest nation in the world. So I think it's a real myth that inflation means that, there's demand in the economy. No, you print money, you devalue your currency, you create inflation, even if the economy is weak.
Well, what I like to do is, we're about out of time, so I like to do another video and get pick your brain a little bit about the long-term trends in the next couple of years, or what's going to happen next year. So before we go, I'd like to just see what you think about just the rest of this year, next couple months. What do you think the market's going to do, or gold, or whatever?
We'll stick to gold because that's what we're talking about here. So what I really think the gold market is doing is, I think it's having a breakout like it did in the fourth quarter of 2007. And just so I've been saying this all summer as well, that in this fourth quarter we'd probably break out. Thought it happened a little later in November, but it happened a month early, which is not, still on the right side of that trade. So then, like I said, I think when we break out, we get through tax law selling season in these juniors, and they can really lead the gold market going forward here. So what I would expect next year is after a short-term pullback, gold will continue higher. People will keep looking for a larger pullback that won't happen. We'll continue to see a breakout in gold and strength in the gold and gold stocks. And I hate to be so biasly bullish on something, but when I see the seasonal trading pattern and I compare it to what happened in the fourth quarter 2005 and fourth quarter 2007, it's exactly the same.
Well, it's certainly, to me, right now, it seems to be the most bullish thing in the stock market. I mean, it's gone up the most, the gold stocks, for the past month or two, and I don't see why that probably won't continue. So, but anyway,
and this is without the public pouring in. I think people are still on the sidelines with gold stocks.
Oh, for sure. But, well, I guess we better take off, and we'll do a follow-up video and put it up in a day or two. So it's good talking to everybody.
Nice seeing you.